What up traders, I am Agbosame Ode, the Liquidity King and the AED Sniper Trader back on your screen. And in this video, we're going to be talking about understanding chart patterns, right? If you're getting started in trading and you're trying to shape your knowledge on how to structure your idea in understanding how price really moves, then you really want to sit tight and understand the concept of what I'm going to be sharing in this video, right? So now let's get on to the content. So for the content, we're going to be talking about the introduction, what chart pattern is, type of chart pattern, major reversal patterns, head and shoulder patterns, double top and double bottom, major continuation patterns, and chart examples. So now let's get to what chart pattern is all about, right? So chart patterns are visual formation on price chart that helps traders identify potential market direction based on historical price behavior. They are built from price movement that indicate whether the market will continue in its current trend, reverse, or move sideways. In short words, guys, chart patterns are simply market psychology visualized, right? So this is what chart pattern is all about. So now let's head on to the type of chart patterns that we have, right? So we have two major chart patterns, right, which are the reversal patterns and the continuation patterns, right? So now let's head on to what the patterns really entails. Now the reversal pattern simply indicate a trend change when certain patterns form on the price chart. So you need to understand that price move in a certain way, right? Now we use this pattern to identify where market might likely reverse when trading the market, right? It gives us a 4C in the chart on a price chart to determine what price will do before it happening. And for continuation pattern is simply a pattern that indicates a trend continuation when certain pattern form on the price chart. So now let's head on to furthermore. Now the type of chart patterns we have for major reversal patterns, we have the head and shoulder pattern, we have the double top and the double bottom. They are triple top, they are rounding bottom and top as well, but for this we're going to be just measuring on head and shoulder patterns and double top and double bottom patterns, right? Because these patterns are frequently shown in the market, like you can literally see them present. These are the popular patterns that present themselves frequently on the price chart. So now let's head on to understanding what these patterns are all about. So for head and shoulder pattern, head and shoulder is a chart pattern that signals end of an uptrend and price might likely reverse into a downtrend when it forms on the price chart. Now the structure on how to trade this pattern is simply, now what you need to know is it first form a left shoulder, right? Remember, in head and shoulder we have two type of head and shoulder. We have the bullish and the bearish head and shoulder, right? Now this is for the bearish head and shoulder, right? So it forms a shoulder and it forms a head and it likewise form a right shoulder, and we have the neckline, right? These are the things that we need to look out for. So now this is clearly an uptrend. As you can see, this market is trading up, right? Now you can see price created the left shoulder, created the head, and also created the right shoulder. So this is the left shoulder, this is the head, right? This is the head and this is the right shoulder. Now this is the neckline, right? This is, sorry, that's the right shoulder, right? Not the right shoulder, and this is the neckline, right? This point price is holding a support here is the neckline. Now what we look out for is we expect that when this pattern form on the price chart, price would, on the right shoulder, price will have to trade and take out the neckline, and once it take out the neckline, we simply wait for a pullback to that neckline and we look for our entry at that neckline point, targeting the downside, understanding that price has changed from an uptrending market that we knew it to be to a downtrending market, right? Now this is a chart example of it. Now we have the left shoulder, right, and we have the head, and we also have what, the right shoulder. Now this is the neckline, right? This is the neckline right here. So now we expect that at the right shoulder for price to come and take out the neckline, right? And once it takes out the neckline, it just simply go and retest that neckline. Then we find our entry using candlestick patterns that I've explained on previous videos. So I would add the link here so that you go watch the candlestick patterns that I talked about and the formation, right? So now we look for our entry downwards, like, because price has changed from an upward market towards a downward market, as you can see. So this is simply what head and bearish head and shoulder pattern is all about. Now let's look at the inverse head and shoulder, which is for a bullish market, right? Now for the bullish market, we expect price to create a left shoulder and also an head, and we expect it to create a right shoulder, and this is considered to be our neckline, right? Now on the chart it doesn't really show like this, right? There, the chart will not always print it as like the way we do it on diagram, but this is the logical form of how it looks. So what do we expect now? After price create the right shoulder, we expect price to go back up and take out the neckline. And what do we do once we see a clear breakout of the neckline? Then we know that now buyers are in control, right? We know that buyers are involved, right? So then we expect that price straight back to the neckline, which is more or less like a support, a resistance turn support. If you've watched my previous candlestick or my support and resistance video using candlestick formation, then now at this point we start looking for candlestick formation giving us bullish what presence at the neckline. Then once we get the candlestick formation, then we join the buys. Now as you can see, this is a chart example of an inverse head and shoulder. So we have the neckline being this point right here, and we have the left shoulder here, we have the head, and we have the right shoulder. Now as you can see, price traded up and came back down, breaking the neckline, right? As price came back down, you can see that if we're looking at candlestick formation, then we can join the buys, knowing that buyers momentum have died in the market. Now what are we seeing? Bullish momentum, right? Buyers are more in control of the market. So this is simply what head and bullish and bearish head and shoulder is all about. Now let's go on to the next slide, right? Now we'll be talking about double top and double bottom. Now double top is a bearish reversal pattern that formed twice, creating a resistance level, hindering buyers pushing price higher, right? When this form on an uptrend, it indicates selling momentum and price might likely reverse, right? Now let's recap again. A double top is a bearish reversal pattern that formed twice, creating a resistance level, hindering buyers from pushing price higher. When this form on an uptrend, it indicates selling momentum and price might likely reverse to the in the opposite direction, right? And for the double bottom, we have double bottom is a bullish reversal pattern that formed twice, creating support level, hindering sellers from pushing price lower. When this form on a downtrend, it indicates buying momentum and price might likely move reverse, right? Now this is a scenario of a double bottom, right? Now a double bottom is a reversal pattern for an uptrend, right? And a double top is a reversal pattern for a downtrend, right? This is simply what it is. So always know that a double bottom, as you can see, is an indication that buyers are gaining momentum in the market, while a double top is a momentum that sellers are gaining momentum to push price lower in the market. So now what do we look out for? We look out for double bottoms, right? We simply look out for double bottoms. Now we also have a neckline. What we then do is we wait for after price create the first bottom and create the second bottom. We expect that price will likely go for the neckline, and once price break the neckline, we expect price to trade back down to the neckline, and from there we can look for an entry continue going up, indicating bullish momentum, right? Now that's what we look out for. Now for a double top, it signifies that after we see a form of the first high and we see another form of a resistance high, it indicates selling momentum, right? This indicates selling momentum. And what do we expect again? We look out for the neckline, and we expect that when price break below the neckline, what do we expect? For price to trade back down to the neckline again. Then we look for an entry using candlestick formation, right? Now this is a chart example of a double bottom. As you can see, we had the first and the second bottom, and we had this as the neckline, and you can see the breakout, right? Now we did not get a retest, right? But if you're trading off the breakout, now there are two ways you trade this. Either you trade the immediate breakout or you wait for the retest. Like me, I personally wait for the retest, right? I always wait for the retest, but you can also as well trade the immediate breakout. But sometimes there are gonna be a lot of fake out in this market, right? So that's why I wait for a retest, then giving me candlestick confirmation that can make me go have more confidence and confidence taking the trade. Now we also have a double top here. As you can see, we have a double top, and what do we have again? The neckline. So when price creates the second top like this, what do we expect? We expect price to trade lower to take out the neckline, and once price take out the neckline, remember you either enter immediately after the breakout, right? Or you simply wait for price to trade and retest the level again before joining on the sales, right? This is how we look at double top and double bottom, and please identifying them on the price chart is very important, right? So let's head on to the next slide, right? So now we'll be talking about major continuation pattern. Now for major continuation pattern, there are a lot of patterns. There are ascending pattern or ascending triangle, there are descending triangle, and there are what is it called, wedge patterns, and likewise of other patterns. But we'll not be talking about all of those patterns. And by the way, I'll be sending a PDF that you can learn all the patterns on my free Telegram channel, right? I'll be posting the chart pattern PDF there so that you can learn other chart patterns. But for this, we're going to be limiting it to the basic patterns that always form on the day-to-day interaction in the market. Right now, what an ascending triangle pattern is, it is a bullish continuation pattern that forms during an uptrend, right? It shows that buyers are gradually gaining strength while sellers are struggling to push price lower. Now this is simply how the pattern forms, right? As you can see, we have a low, we have another low, and we have another low, right? Now you can see we have a resistance, we have a resistance. So now price is creating higher lows, right? Price is creating higher lows, showing bullish strength. You can see that the lows are higher, showing that buyers are pushing the price constantly up, right? Showing that buyers are pushing the price constantly up, and you can see that sellers are just weak, right? Sellers are just at the spot putting price lower, and there's a likelihood that price will go and take out that level. And once it does, what we simply do, we wait for a retest back to that resistance point, right? And once we get a retest, then we look out for candlestick formation, right? If you haven't watched my candlestick formation video, please, I urge you to go and watch, and also likewise for support and resistance, because with that you will understand how to trade these key levels, right? So now once price trade back to the resistance point, what we simply do is we look out for candlestick formation indicating bullish momentum. Then once candlestick forms, then we look for buys, right? And this is how it looks on the chart, right? As you can see, we have a low, we have a higher low and a higher low, and we just have a resistance point that sellers are just there, and you can see the breakout. Some people jump immediately after the breakout, but I personally don't do it. It depends on the kind of trader you are. Me, I'm a conservative trader. There are aggressive traders that will just enter here and put their stop loss below after the breakout, but I simply wait for price to trade back down to retest the resistance level it broke. Then I simply look for candlestick formation that indicate buying and presence on the chart, right? Then once I get that, then I just join in on the buys, right? Now let's head on to the descending. Now for the descending triangle, it is a bearish continuation pattern that formed during a downtrend. It shows that sellers are gradually gaining strength while buyers are struggling to push price lower, right? This is simply what it means, right? So whenever you see this pattern forms on the price chart, it signifies sellers are gaining more momentum, pushing price lower, while buyers are weak, right, on the market. So this is how the pattern form, right? Please note or know how the patterns form, right? And on the chart, this is how it looks, right? This is the opposite of an ascending triangle, right? So this is how it forms. So whenever you see this form, what we simply do is we wait after the breakout of the support level. We wait for price to retest that support level again, and once we get for the retest, what we simply do is we look for candlestick formation giving us bearish intent, then we join in on the sales, right? Yeah, this is simply how it is done. Now let's head on to the next. So now we're going to be talking about symmetric triangles. Now a symmetric triangle is a neutral continuation pattern that forms when buyers and sellers are in balance, meaning neither side has full control of the market. It often appears at mid-trends. Now what a mid-trend is more like at the middle of a trend, right? And signals that the market is consolidating before making a strong breakout. Now this is how the chart looks like. Remember, this is more or less of a consolidation market, right? As you can see, right, you can see sellers are making lower highs, right, and buyers are making higher lows, right? So it signifies indecision in the market, more like a consolidation. So what we simply do now, we don't know if even if the market was in an uptrend or a downtrend, we can't tell if the market will continue going higher or the market will continue going lower. So what we simply do now for we to tell if it will continue going higher is we simply wait for a breakout from either the what's it called, the resistance trend line or the support trend line. So wherever price break out from, then we simply wait for a retest. If it's a bullish scenario, we wait for the retest of that trend line again, adding support and resistance as confluence, right? And using candle confirmation to tell if truly that breakout is valid or not. Then from there we can look for candlestick patterns, adding it with support and resistance confluence to join the buys, right? Or if it's a bearish, if it then turns bearish, then we look out for the same thing again. We wait for market to retest the support trend line, right, or the trend line. Then what we simply do, we add it with other confluence of support and resistance around that trend line retest. Then we look for candlestick confirmation giving us bearish intent, and once we get a clear candlestick formation, then we can join the sales. Right now this is a scenario of when price breakout bullish, and this is a scenario of when price breakout bearish. So always remember that a symmetric pattern is more of an indecision pattern that forms on the price chart that tells us that we are in an equilibrium phase, which is indecision, right? Then we wait for a breakout either from the upward trend line or the downward trend line, right? Or the bullish trend or the bullish trend line or the bearish trend line points, right? Then once we get that, we simply wait for a retest, adding the confluences of support resistance around the retest trend line zone and looking for candlestick confirmation. So these are basically the chart patterns that I mostly trade looking at the chart, right? And there are a lot of chart patterns, like I said, but these are the ones I personally focused on, and these are the ones that present themselves frequently on the price chart. So head on to my description box below. You will see the link to join my free Telegram channel, where I'll be posting a complete PDF guide that talks about varieties of chart patterns, right? And if you found value from this video, kindly like, share, subscribe, and hit the notification bell to get notified when I drop trading educational content like this. Please like, as I stated, and subscribe, because it helps me and encourage my algorithm to reach out to more audience, right? And yeah, I will see you in the next video. Peace out.